All right, we're going to go ahead and get started today. It's Monday, March 8th. It's 11 a.m. section. Recording is on. We have much to cover both today and this week. So as we get started, just a couple of housekeeping logistics items. First, I moved the General Dynamics presentations to the Monday after spring break. So rather than doing the presentations on Wednesday, March 10th, you'll be doing those presentations on Monday, March 22nd. Just wanted to have a little bit more time for practice and preparation and also give you a chance to get some grades back on the homework assignment you did, homework 6 with Target. So just giving you a little bit more time on that. So in just a few minutes, we'll go over Target, do another in-class example, and walk through both the the ROIC tree and the CFI analysis that you'll need to do. I also posted the data, which I'll show you in just a minute, for that General Dynamics presentation that you'll be able to use on your teams. In addition, I'm going to give you class time on Wednesday, which was originally scheduled to do the presentations, to work as teams on the presentations, since obviously you're going to be going into spring break with this and you got to be ready. So I'm going to give you Wednesday during class. We're not going to have a lecture. So you're going to have class time to work on putting together your General Dynamics presentation. Okay, so you'll have that to work as teams. And then, as I said, on Monday, the 22nd, you're presenting all day during class. The other thing that's going to happen this week is Friday at 5 o'clock is the end of the first half of the Bloomberg Trading Challenge. Okay, so you don't have to sell all your stocks. In fact, you don't really want to do that because then you would go to cash and that would cause a problem with meeting the minimum cash requirements. But basically, I will take a screenshot at the end of trading day on Friday, and then I will post the rankings. And then what will happen is that the Monday that we come back, which is the 22nd, same day you're doing your General Dynamics presentations, we'll start the second half trading challenge. So all the teams will reset back to $1 million. Your trades will essentially be gone, and you'll basically start with a new cash portfolio of $1 million, and we'll do another 6-week sprint, basically with the same rules that we had in the first half of the semester. Okay, so again, you'll get the first 5-point grades, 6 teams. I'll show you just a second where you stand. But basically that grade will be done on Friday. And then, as I said, on Monday, the 22nd, we'll reset the competition back essentially to $1 million, each of the teams. And then we'll start training again for the second half of the training competition. The other logistics item that's coming up is on Wednesday, the 24th of March, is going to be the midterm exam for the class. Okay, so basically that midterm you will do during class time that you're registered for. So this is the 11 a.m. section, so that you'll take it during the 11 a.m. section. If you happen to have been watching this on video or somebody else is attending from a different section, you will take it for the section that you're registered for during the time of the section that you're registered for. And essentially it'll be up to a 90-minute exam. It'll start at the beginning of the section and at the end of the section, and you're doing it online. Basically, what the midterm exam is going to be is it's going to be a statement conversion. So I will give you income statement, balance sheet data, and I'll give you the 1, 2, 3, 4s. And then during class time, you will have to basically turn that into a TII, a TFI, a CFI, and an economic profit, fully balanced. No write-up, but basically that's the exam. The only difference is you'll be doing it during class time. Okay, and you'll be doing that on Wednesday, the 24th of March. And I'll put up later this week, basically what I'll call a practice midterm. So basically a conversion I've done in the past so that you can, which we use as a midterm exam, so that if you want to try practicing again, you'll get some additional practice on working through the conversion for the midterm exam. So a lot coming up in the next couple of weeks. Questions about any of that before we get started?
is the grading for the midterm going to be similar to homework assignments? Like, I guess in particular, like if, for example, like our balance, one of our balance sheets didn't balance on the midterm, would that just be a 0% for the entire midterm? How kind of did that work?
Well, it wouldn't be for the entire midterm, but it would be for that section. So if you don't have for example, a balancing balance sheet, then you're going to lose points on the TFI part of the midterm. Although generally, if you don't balance the TFI, you're also probably not going to balance the CFI. So
Right.
you'd most likely lose points there, but you could still gain points if you got the right TII and the right economic profit.
Okay.
Sure. But again, yes, you'll have to get balancing statements. Right. Any other questions? All right, let's just check in on the trading challenge, because like I said, that's going to end on Friday. Just get a sense of where we are. All right, so basically, I was just watching the virus news while we were talking on Bloomberg. That basically said, the CDC just said that if you are essentially vaccinated, they're going to stop their demand that you wear masks indoors. So I think that's actually very important going into spring break. In any event, let's see, here is idea. Yeah, this is section 101. Let's see how we're doing. Okay. All right. So first of all, the good news is all of the teams have made their minimum 10 shares. Okay, that's the good news. The bad news is this team here has too much cash. So did you guys just sell something on Friday? This team with 380,000 in cash?
Yeah, we just sold our short positions and switched them to long.
Okay, so you're gonna basically invest that cash today.
Yeah.
Okay, just make sure you do, because I like I said, you can be there for a day, but you can't go to cash this week and say, oh, we're in first place, we don't want to trade as much, so you'd be disqualified. So make sure that you quickly get that back into cash and stay under the $300,000 limit. But assuming that they do that, they are in first place, not by much. Again, you can see that they have that portfolio value. Two teams are in the black. These other teams are in the red. But nonetheless, this would be the scoringest today, assuming that they get out of cash. If they don't get out of cash, they'll be disqualified. They'll get a 0. And then basically the next team will move up to first place. But assuming they do get out of cash and meet the requirements, basically they would get 5 points. 4, 3, 2, 1 would be the grade distribution on Friday if this were the final close. All right. Any other questions about the trading competition? Pretty straightforward, but this is where we are as of today. Okay. All right. So again, don't sell everything on Friday. Right. So if this were Friday, this team were above 300,000, then I would not count that as a final position. So you have to be under 300,000 on Friday as well. And this team needs to be there by tomorrow. So this is the trading competition. And remember, if you are selling something, somebody just asked about this, you have to select your section in the drop down first. If you don't select in the drop down, your ability to sell is not there. And by the way, when you click on myself, that's where the circle red X comes into play. So that's what you would click to close the position or basically sell your stock if you are trying to trade out of something, just as a quick reminder of that. All right, so let's today talk about target. So I posted the files for the homework, if you don't have them handy. They're in files in a folder called homework 6. It's the CFI and the ROIC tree. So these were the two files. We'll start with the ROIC tree for target. Download and open it. So for today, again, this would be very similar to what you would be doing for your group project presentation. The one major difference between this and your group project presentation, as I said, is you'll have 10 minutes 2 weeks from today. And what you'll be doing is approximately 5 minutes in the ROIC tree, approximately 5 minutes in the CFI. You have to go through all the sections of both. So the 2 levels of analysis of the ROIC tree, which we'll talk about in just a minute, the 4 sections of the CFI. You have to use numbers when you talk through this. As I said, you're not just responsible for the beginning and the end. You will have to make references to the kind of intermediate years if important. And as I said, you need to know a little bit about the company itself, particularly General Dynamics, because I know we've done an EIC on it. So if I start to see numbers on General Dynamics that are relevant, I might ask you a question about why it changed, and you should have some idea. Okay, so that's just some general thoughts leading into the assignment. But here's what you probably should have said about target. Okay, so you would have started left to right, and over here you would have said, look, the ROIC of 15%, 15.2 went down to 13.9 over 5 years. That was an 8.8% decline. Okay, so the first question is why? Okay, and we talked about drivers. So the first driver was basically, was it the tax rate? And 2016, the tax rate was 32.5%. 2020, the tax rate was 22%. So the tax rate is actually falling by 32%, giving them a benefit. So that should be helping your end of year ROIC. So that's not why the ROIC went from 15.2 to 13.9. Okay, the ROIC was actually benefited by the tax rate. Okay, so that was actually favorable. So the entire drop in the ROIC for the 5 years was pre-tax, because the pre-tax ROIC went from 22.6 to 17.8. It was a 21% drop, right? So as I look at the second and third drivers, the second driver of what led the pre-tax to drop from 22.6 to 17.8, look at the operating margin. General Dynamics, Target's operating margin was 7.5% in 2016. In 2020, it fell to 6%. It's a 20% drop. Okay. Third driver was invested capital sales or productivity. 2016, they were spending 33 cents per dollar to generate 3 cents per dollar of investment to generate $1 of sales. They were basically spending 33.5 to generate the same dollar sales. Productivity was virtually unchanged. So really all of the drop in the pre-tax ROIC from 22.6 to 17.8 was really a drop in the operating margin from 7.5 to 6. If we look at the second level drivers, what was behind the drop on the operating margin in the income statement, their gross margin actually went up on their products from 32.2 to 33.1. Okay, so they had a slight increase in their gross margin, but their SG&A as a percentage of sales went from 21.7 to 23.8. So that went up at a much faster rate than their gross margin. So essentially, that's about, call it 2 cents, 2.1 cents here of SG&A per dollar of sales, versus this went up by about 0.9 cents. And then depreciation, again, went up slightly from 3 cents to about 3.3 cents. So really, if I want to understand what was primarily behind the drop in operating margin at Target during this 5-year period, it was the operating margin going from 75 to 6 was primarily because the SG&A went from 21.7 to 23.8. And most of that occurred between 17 and 18, when it went from 22.1 to 23.9 and has been held steady. Okay, so essentially that's when the operating margin, you can see, fell in 2017 to 18, fell from 7.2 to 5.8. If I look at their productivity, it was actually pretty flat over the 5 years from 33 to 33. So working capital, again, went from -1 cent to about -4 cents. So they got a little bit better on their use of working capital, but PP&E went from 34 to 36.5. So essentially the working capital gains basically neutralized the extra spending they did on their stores, right? And they virtually had no intangibles, 0.004 to 0.009. So they really weren't doing any acquisitions, minor purchase between 17 and 18, but really no major changes to their balance sheet. Story of Costco is the increase in SG&A which led to the drop in the operating margin, which led to the drop in the pre-tax ROIC from 23 to basically 18, which is the primary reason why their after-tax dropped from 15 to 14. I think I actually did that in under 5 minutes. Questions about Target. How to do the walkthrough, how I did the walkthrough.
I guess for me, in my analysis that like I submitted for this homework assignment, I didn't really talk about the working capital and like that part too much because I mentioned invested capital to sales stayed constant and that it really wasn't affecting the ROIC at all. Is that okay, or would that like lose points?
Well, I would say, I mean, as you're getting started, I understand that, you know, you want to talk about the bigger things that change and you got to get efficient at doing this. So again, when you go through this on 2 weeks from today, I'd strongly recommend like using some note cards or at least practicing and writing notes so you don't get lost in all the numbers. But with that being said, there's a lot of data to cover. And so you have to be efficient in covering the data. So what I would say is at a minimum, you got to cover the changes, the big changes. And if something's not changing, you don't have to spend as much time, but ideally you at least want to mention it. So again, you notice that when I went through invested capital sales, I left that to last. And I had said, okay, that one didn't change that much, 33.2 to 33.5. But I did say it didn't change much, but working capital did change. It did go from -1 to -4. And PP&E did change. It went from 34 to 36.5. So even though invested capital didn't change to sales, what was actually happening with Target did change a little bit. And I at least wanted to have a nod to that when I did my analysis.
Okay.
Because they got more efficient in their current assets, current liabilities. They got a little less efficient in their long-term assets, just as a general trend over the 5 years. Other questions about the CFI walkthrough?
So you have a brief one, I guess, in intangibles from 2017 to 2018, you mentioned that, and I found that there was an acquisition. Would that just not have to be mentioned in an actual presentation because the impact was so small?
No, if I had 6 teams, I had 6 questions, I'd probably ask if one of the teams who they bought, even though it was small. So who did they buy?
They bought Shipt.
Oh, the kind of like 2-day delivery service.
Yeah, it was used for same-day delivery for them to increase their capabilities for that.
There you go. It's a great insight, by the way, about what they're trying to do. And again, there you go. That's exactly the way that you'd be answering the question in the live site. So good extra analysis there on Shipt.
Okay, thank you.
No, thank you. I learned something new today myself. I didn't know Target had acquired Shipt. All right. Other questions about the ROIC tree for Target?
I have a question. So even though like the percentage increase for the operating working capital to sales and intangible over sales is the largest percentage, those actually did not have a major effect on the company, is what you were saying?
I think you're answering your own question, but yes.
Yeah.
And so
how do you
the
explain
percentages?
that?
Go ahead.
Sorry, my question is just like, how do we explain that? Like, are we not really supposed to look at the percentages as much, and what are we looking at then?
Well, I'm just saying that the percentages are a guide to help you just have cues that things are changing. Okay. So when you see a big change, you know something is changing. But then you have to also then immediately think about the magnitude. So if it's a big change in a tiny item, which is intangibles, then that's not really significant to what's happening with Target. Where a smaller change to a bigger item might actually have more of an impact. So for example, SG&A only went up by 9.7%, but that was telling in terms of the magnitude of the 21.7 to the 23.8. So that was much more important, right? So like I said, the percentages are there more to help you understand direction, right? But it's the magnitude that really matters, and just recognize the magnitude of some items are bigger than others. So the percentages are not directly comparable when you go through the analysis.
Okay, thank
Good
you.
point. Well, that's a good point. All right. Other questions? All right, so let's flip over and talk about the CFI. right? So again, there's 4 sections of the CFI. You must mention at least all 4 sections, starting with the total. But as I said, you're also responsible for the intervening years, any major changes there as well. You will start with free cash flow, right? So you start right here, the 17,933 of positive free cash flow over the 5 years. Okay, that's where you should start. And remember that if it's a positive cash flow, the general nature of your analysis will be, where did it go? How did they generate it? Where did they spend it? So that's kind of what I'm going to be talking about as I walk through my analysis. So how'd they get 17.933? Well, starting with the income statement, they generated $29.4 billion worth of gross cash flow from the income statement. They reinvested $11.1 billion back in the balance sheet, which averaged a 38% investment rate over the 5 years, generating free cash flow before acquisitions of about $18 billion. They spent about $384 million on goodwill to basically get $17.9 billion worth of free cash flow. Speaking of that acquisition of Shipt, then in 2018, they put $450 million primarily into buying Shipt as a purchase price premium. If you look at the investment rate, which averaged 38%, generally the investment rate went from net zero, because remember the CapEx is being balanced out by the negative working capital, 34 to 55 to 58 to 43. Okay, so really, if you take out increases of working capital, then CapEx went from about 1.5 billion to 1.7 billion to 4.2 to 3.5 to 3.6. So it kind of peaked in 2018 at 4.2 billion, but still fairly strong in 2019, 2020. As a matter of fact, if I look at the ratio between CapEx and depreciation, they're spending a little over 2 billion, 2.6 billion a year on depreciation, 3.6 billion in CapEx, which again is a signal that says they still expect growth over the next couple of years. And if I look at their gross cash flow, their income has been steadily increasing from a NOPLAT of 3.3 billion in 2017 to 3.6 billion in 2020, although 2020 is not as good as it was in 2016. Okay, so what did they do with the $17.9 billion worth of operating free cash flow? Well, let's look at the non-operating cash flow. They turned 17.9 billion of free cash flow into 18.6 billion, 18,570 of CFI to be paid out. So what did they do in their non-operating items? Well, the first thing they did is they decreased their net non-operating assets by about 738 million, although most of that was done back in 2016. They've increased their excess cash by 312 million, particularly almost 993 million in 2020, and about $135 million of an extraordinary gain. When you add all that up, you get about 18.6 billion, 18,570 of CFI to be distributed. How did they distribute this 18,570? Well, they paid 2.3 billion to interest to the bondholders and the banks. They borrowed an additional $1.2 billion worth of debt, primarily in 2018, 870 million. It's probably related to the Shipt acquisition, and 529 more million in 2020. They clearly didn't truly over the 5 years need to borrow that given their CFI was 18,570. So what did they really do with the money? Well, down here we can see they spent $6.7 billion on common dividends, and they bought back almost $12 billion worth of stock, 11.9 billion. If I add the 12 and the 7, that's about 19. So again, how do I pay out 19 if I only have 18 of CFI? That was the difference in the debt, just at a very high level. If I do look at the share repurchase, though, I can see that they repurchase shares every single year, although the most of the share repurchases occurred back in 2016, 2017. They've slowed it down relative to what they were doing before, and they've slightly increased their dividends, actually decreased their dividends here, 1330 versus 1362. What's probably happening here, and I'm just going outside the CFI, is that they've been buying back stock pretty heavily and they keep the dividend per share constant. Since there's fewer shares, there's less dividends. It's probably what's going on with Target. But in any event, that would have been kind of some key things to talk about the CFI. And again, didn't time myself, but I think I'm probably there in the 5-minute range. Questions about the CFI? Remember, or maybe you don't remember, but I'll say this. Finance, good finance and financial analysis, financial statement analysis is storytelling. You're telling a story. You're telling a story of the ROIC tree, and you're telling a story of what's happening with the CFI. You're not just reading numbers. Okay. So if you're just reading numbers and you just go fast and throw out a lot of numbers, you're not helping me or anybody else understand the context of what it means. So that's the point. These numbers tell a story. Tell me the story of what's going on with Target. Tell me the story as you walk through the CFI, the twists and turns of what's really going on here. Tell me the story of what's going on with the ROIC tree. In fact, you can even relate some of the things to the ROIC tree versus the CFI and what the company is doing. But you're telling a story, right? And so in the story, make sure you use numbers, right? But that's what you got to start practicing. So it's not just a regurgitation of numbers. Your presentation shouldn't just drone on. Target's cash flow is 29,434.2. Their free cash flow is 17,933.3. Their free cash flow before goodwill was 18,317.3. Their CFI was 18,570. Like, that's not even a presentation. Like, don't do that. That's not helpful. So if you're just rambling a bunch of numbers without putting it into context, give me the context of what it means and how it fits into the bigger story of what the analysis is telling you, I'm going to give you a lower grade. Okay. So the other thing that's just very important as you do this is when you tell your story, you got to use numbers. So if you say Target earned a lot of cash and you can see that their reinvestment rate was fairly high, particularly in the last years, and they basically use their free cash flow to pay a bunch of dividends and buy back stock, like, that story is pretty useless too, because I'm sitting there listening to it in a vacuum. I don't have any context for the numbers. I don't have a sense of the magnitude of the story that you're telling. So you got to use both. You got to recognize you're not just regurgitating numbers. You're helping connect some dots. You're giving numbers. You're bringing me along for the journey of the analysis. And just remember, for grading purposes, just because you see the connection, if you don't say the connection, I'm not going to give you credit for the connection. That's just very important when you do financial statement analysis, because you're looking at this and everything makes sense to you. And as you're reading numbers, if you're not getting the person that you're talking to follow along, they may not be making the connections that you are. You have to help making the connections as part of your story. That's what makes a good financial analysis. And that's what you're going to be graded on as you go through this presentation. Again, questions about any of that? All right, so I'm going to give you a chance to do a quick practice. So if we go back to Elms in the files folder, I'll mention two things, but the data for General Dynamics is here. But I also did a Delta Airlines CFI ROIC tree that's in a folder called Delta in class. Okay. And what I'm going to do is I'm going to put you into Zoom rooms in just a minute, give you about 15 minutes to organize your thoughts, kind of go through a little bit of a CFI and an ROIC tree, and then I'm going to bring everybody back, and then we're going to talk through it as a class, just very briefly. Now, this is pre-crisis Delta. I just did it through 2019. I didn't include 2020 because it's just a completely screwed up year because of COVID-19. So this is kind of like the airline before COVID, leading up through COVID in the 5-year period. You have the tree, you have the CFI. Give you 15 minutes in Teams just to kind of talk it through. We're not doing this really for a grade. This is just a practice. When we come back, we will practice and we will share. Okay. So this is again in the files folder. It's called Delta in Class. So I'm going to pause the recording while you guys are in your breakouts. And then, like I said, I'll bring you back in about 15 minutes and then we will talk this through.